Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Brent Johnson from. Well, he's the founder of Santiago Capital. Welcome, Brent, for the very first time.
Thank you for having me. It's nice to talk to you.
It's nice, it's nice to have you here. I have to say your reputation as the dollar milkshake theory man, it's great because I can relate to that and I understand it. But maybe if you could do us a little bit of a favor, talk a little bit about yourself and what the dollar milkshake theory is and how it evolves the way your thought process is around the markets.
Sure. Well, in order to do that, let me just give you a quick little background on myself and then why the milkshake theory even came about and how I see it playing out. Long story short, I've got a wealth management business. I manage money for wealthy families and individuals. And a big part of what we do is figuring out, really what it is that they have, like what assets they have and what they're trying to accomplish. And no two clients are the same. And so we customize everything to each individual client. And these clients, they're not just trying to make money. Of course, everybody wants to make money. But, when you have a big portfolio or you've accomplished a certain level of wealth, the last thing you want to do is give it away. So in addition to trying to make money for clients, a big part of my job is looking for risks or underappreciated risks or what could go wrong and cause this nice portfolio that we've built up over a number of years to disappear. And so that is really the risk management is the genesis of the dollar milkshake theory. And for those who have not heard about it, the dollar milkshake theory is essentially an outcome of all the, I guess, crazy, for lack of a better word, central bank policies over the last 12 years. We all know that the Fed has done a number of extraordinary measures, printing of money, bailouts, however you want to describe those. And I think a lot of people also realize that the rest of the world has done the same. And so, as we move forward in time, it's become a very popular thesis, for lack of a better word, to say that the US dollar is going to get inflated away. And the dollar index is going to go down to 80 to 70 to 60 to 50. And so as a result, you've got to get into real assets and get out of fiat currency. And it's not that that's an incorrect statement. I have a lot of sympathy for that statement. And I think everybody should own real assets as part of a diversified portfolio, whether it's gold or real estate or some commodities. But I think that a lot of people get this wrong when I feel like they learn a little bit and they stop learning. Because if you increase the amount of currency in the world, it makes sense that each unit of currency loses value. It gets diluted. But in a fiat currency world where everybody's doing the same thing, you have to understand that currencies trade relative to each other. So the idea that the US is just going to print all this money and it automatically means that the dollar falls is actually wrong. And it's very easy to prove because all you have to do is go back to 2007 before all this massive money printing started. And you'll see that the dollar index was lower than it is today, 12 years later, where we've increased the size of the Fed balance sheet by 10x. In the last year and a half alone, we've printed $1.5 trillion, but the dollar index is flat over the last 12 months. And so the reason I've kind of brought this up is I think the dollar rising is one of the most underappreciated risks out there. And I think it's not only likely, it's possible that it could rise. I think it actually will rise. And so it's not a risk that I can just ignore. Because when the dollar rises, really bad things happen. And so that was kind of a long rambling answer to your question, but that's the genesis of the dollar going high or the dollar milkshake theory. And it's why I think it's so important to understand. Even if it doesn't happen, it's important to understand it.
Yeah, sure. And I 100% agree with you. And I think that's where a lot of analysts really got it wrong at the end of 2020, going into 2021, where every call was really a bearish dollar call across the board, across the spectrum of every bank. And it's interesting that those analysts at banks really didn't figure it out. And here we are at the end of 2021 at the time of filming, and the dollar just hit a fresh 52-week high just this last week. So
that's right.
How explain to the viewers and explain to us this, Brent, if the dollar index continues to rally, what kind of pressures would that put on the global economy?
Well, another great chart would be to just go back and look at the dollar index chart over the last 30 years. And then look over the last 30 years, whenever a crisis developed or global growth slowed. And every time you'll see that the dollar rose. And the reason is because the world is on a dollar standard. Many people remember the gold standard of either, 40 years ago or 100 years ago. That's gone now. A lot of people would like to go back to it, but the reality is we're on a dollar standard. And what that means is that every country around the world, or most countries around the world, hold dollars in reserves rather than gold in reserves. They're starting to own gold as well, but they hold dollars in reserves because commodities trade in gold. We have the global reserve currency. The dollar is the global reserve currency. Trade takes place in gold. You have to buy U.S. goods it takes place in dollars. You have to buy U.S. goods in dollars. When Japan buys soybeans from Brazil, it's done in dollars. So there's this huge demand for dollars. And so based on the design of the monetary system, the system has to grow. If it doesn't grow, it's essentially a credit contraction. And again, all you have to do is go back and look up credit contractions and look and see what happens to asset prices during credit contractions. They typically fall, right? And so we're on this system where the system must grow, but for the system to grow, debt must grow. Debt is ultimately deflationary, so it can grow and grow and grow, but eventually you're going to get that credit contraction. And again, I don't know exactly when it will come. I just know that it will come, right?
Yeah.
And all of that debt out there is demand for dollars, because a lot of people know that the US is way in debt, $28 trillion in debt or whatever it is. But what a lot of people don't know is that the rest of the world owes even more than that in dollars. So the rest of the world has huge demand for dollars as well. And so what that allows the US to do, it allows us to print a lot of currency and quote unquote get away with it. Whereas Brazil couldn't do that, Australia couldn't do that, Japan couldn't do it, because there's not the same external demand for their currency that there is for the dollar. I think a lot of people base their dollar views on supply, and they forget to look at demand. And I think demand is a huge part of it.
Yeah, that's a really, really great way to explain, what could possibly happen. And it's interesting, Brent, you see, you could go back 10, 15 years and look at, how other countries have tried to exclude dealing with the dollar and dealing amongst themselves. And many countries are trying to get away from using just dollars, but this isn't something that's going to happen overnight. It is the world and is the reality that we are in right now. So I guess my question to you would be, if the dollar was to lose its reserve status, it obviously isn't going to be overnight, or at least it doesn't feel like it's going to be overnight. But how long would that process look in your view, in your opinion?
Well, the interesting thing is that if the whole world decided at the same time to leave the dollar, then the dollar would be in a lot of trouble. And so in that sense, once the decision was made to leave the dollar, it could all happen very quickly. But the point I like to make is that it's not easy to come to that decision very easily. Yeah. And part of the reason is because of these reserves that I was talking about. And what I mean is, whether it's Europe, many countries in Europe, whether it's countries in Africa, countries in South America, Asia, they hold dollars in reserves. That's like you holding money in your bank account. Now, even if you're a big gold aficionado and you own a ton of gold, you don't go to your bank and set your cash on fire. Right? You don't want your reserves to just disappear. But that's essentially what would happen to these other countries if they left the dollar. They would be burning their own reserves. And the problem is if once you start trading less in dollars, it means there's less circulation of dollars. But all the debt still exists. So all of that debt still has to get serviced. If the trading in dollars stops, or it goes down, it becomes harder to service that dollar debt. And if the dollar debt doesn't get serviced, then there happens to be a default. And in a debt-based monetary system, once one default starts, it can set off again a credit contraction in which the total supply of currency contracts. And so now you get in a situation where demand might be falling because they're moving away from the dollar, but if supply is contracting even faster, you can still get a rise in price. And so again, it's a very complex supply and demand curve, but it can happen, and it can happen really quickly, and it can come out of nowhere.
And, I think a perfect example of that is, people like you and I will remember, but, during the GFC or the Great Financial Crisis, that I think just a year or two previous to that, you had a lot of countries trying to move away from the dollar, especially through oil purchases and whatnot. And when that crunch came, the dollar took off like it was nobody's business, and it really wrecked a lot of markets, right? So there's a lot of repercussions that can happen there.
Absolutely. We even use a better analogy is just 18 months ago. So a lot of people don't remember this, but at the beginning of 2020, the consensus was that the dollar was going to fall as well. And actually on March 9th of 2020, when the pandemic was just starting, the dollar went from 97 to 94 in like a week. And everybody said, see, here it goes. The dollar's dead. 10 days later, it was 103 and the whole world was on its knees begging for dollars. And asset prices around the world fell 50 to 60, 70%.
Yeah.
In 10 days. And so this is my point. I wish that I had a crystal ball that could tell me exactly when the dollar is going to spike, because then I could just go do everything else. And right before the dollar spikes, I could convert back and sell everything and be ready for it. But I don't have that crystal ball. All I know is that based on the design of the monetary system, this rogue wave can come out of nowhere. And so I can't just ignore it.
Absolutely.
And so what I tell people is, listen, it's okay to invest. You should have stocks, be invested in real estate, have gold, have exposure to inflation linked assets, whether it's commodities or something else, but don't go all in on it. It's not certain. And that's the biggest problem I see today is people get what's a good idea, and it means that they go 100% in on it. You can have a really good idea and just put 5 or 10% of your money into it. You don't have to go all in. And I think that while we've definitely been in an inflationary environment for the last, call it 12 to 18 months, there's no guarantee the inflation will continue. It might. So again, you don't have to sell everything and sit on the sidelines, but to go all in and not have some kind of a protection against a rapidly rising dollar or a deflationary surge, I think is unwise. And so we always keep some kind of hedges or cash on the sidelines or something to protect against that rogue wave that comes out of nowhere. And it's really a feature of the system. This is not something that I just imagined up. This is like a regular occurrence. Yeah. And so I think you just really need to be ready for it.
Well, that you bring up another good topic, and I want to discuss a little bit about gold and inflation and gold's role in all this, really. And over the last, let's just call it 6 months or so, I've interviewed a lot of people. We've talked about how cryptos have really taken some of the demand away from inflation linked securities or assets like gold or silver. So what is gold's role in this, and what are crypto's roles in this as well, to the dollar? What would you say as far as those markets go?
Well, I think so. I'm a huge believer in gold. I think everybody should own gold in their portfolio. I've owned gold for over 10 years for both myself and my clients. And I think it's probably the most important asset you can own. Now, I actually think that it's probably going to go lower in the short term. Even a week ago, I said, I think the dollar's headed lower. It had a nice sell-off, but then it's had a great bounce here. I own gold, so I'm not upset that it's up. It's nice to make money when you get something wrong, right?
Sure.
But I am convinced gold will pay off in the long term. I'm not convinced that means it's tomorrow or next month. But gold, to me, when I think with all of this extraordinary measures that all these central bankers and monetaries are going through, I think it shows you that the system itself is in trouble in some form or another. And when that system locks up, I think gold will put itself forward as a possible successor or a potential option that from the private market that people could use. And so I think gold will reprice much higher at some point.
And do you think cryptos have they factor in, because they're really now woven into the fabric of Wall Street? So it's like, Wall Street's not going to let it fail. It's just another asset for Wall Street to cling on to. So do you think cryptos will be right there with gold?
Well, I think there's no question that crypto has stolen gold's thunder a little bit over the last couple of years. I mean, really what's happened over the last 18 months is everything the gold bugs have waited years for. And gold's done okay over the last couple, year and a half, but it hasn't done amazingly well like crypto has. So I think there's no doubt that some people are invested in crypto that otherwise would have gone to gold. I actually personally have a lot of, sympathy and I really like crypto from a personal perspective, but I also believe that the governments will regulate it fairly hard. I don't think they're going to ban it. I don't think they're going to say you can't do it. But the idea that they're going to let a private market currency freely compete with their, mandated fiat currencies, I think is a stretch. And I think a lot of people think that they can't really do anything about it. I think there's a lot of things that they can do about it. So again, I don't mind Bitcoin in a diversified portfolio, but again, it's not something I think everybody should go all in on either.
Well, that's a deep dive conversation I'm going to say for the next time that we have the next time you and I speak, because I'm with you on that, and I'd like to actually explore that topic the next time we speak. But let me ask you this before I let you go. As far as the dollar goes, a lot of people write off the dollar as not being the reserve currency moving forward. I mean, who's the next logical successor? Is there one? Is there one that you even foresee? And, how long is that transition period? My guess would be probably decades, but because it's like a big, slow moving ship that's got to turn. But, who is the successor? Who would you see as a natural one?
That's the hardest part. That's the hardest question to answer. And that's probably the biggest reason why I think the dollar remains the global reserve currency. If you go back through history, global reserve currencies are never given away. They're always taken. You never give away power. Somebody takes the power away from you.
Sure.
And as horrible as a currency as the dollar is, and as much as you might not like it, all the other currencies are the same. They're fiats as well. And they don't have nearly the advantages that the dollar has. So to think that the dollar is going to go to zero is to assume that something's going to take its mantle. A lot of people would automatically say China. I don't think that's the case. I don't think that China has the ability or the resources now to be a global reserve currency. And I think the euro is too fractured politically to offer a legitimate alternative. So I really don't see one. Gold would be the most likely successor. And again, that's why I'm a big believer in gold. But I don't think that's happening tomorrow either. So I think the dollar is going to be around as the global reserve currency longer than many people believe, and maybe longer than many people would like. But again, the one thing I always try to tell to investors or traders or anything is, it's kind of like golf. You got to play the lie as it is, right? You might not like the lie. You might not like the way that the guy put the sand trap there. You might not like that it's a 400-yard shot, but that's the way it is. Yeah. You got to play the world as it is, not the way you would like it to be. And the reality is that the US dollar is the dominant fiat currency, and it will take a lot more than what has already happened to change that.
Well, some really wise words. And Brent, I have to say, I found you on Twitter, I want to say about 2 years ago, and you're one of my more favorite follows in recent years. So thank you for being you. But if I'm a trader, I'm listening to you and I'm listening to this interview, how do I follow you personally?
Yeah, so I'm very active on Twitter. Santiago AU Fund is my handle, but if you type in Santiago Capital and look for a shell logo, that's me. I do a number of different podcasts and interviews, so you can go to Google or YouTube and type in Santiago Capital. I have a website. It's really just my contact information, santiagocapital.com. You're welcome to send me an email or a DM on Twitter. I try to get back to everybody. I'm not always successful. Sometimes I get kind of inundated, but I always enjoy talking to people like you, and I'm happy to come back. And the whole idea about being out there is to try to help people, get people to think. I don't have all the answers, but hopefully through some kind of a discussion and a dialogue, we get closer to the answers.
Well, I think you've brought us one step closer. So thank you for your time today. And I can't wait for our next discussion where we're going to deep dive into cryptos. That's what we're going to do.
Perfect. All right. Sounds good.
Brent, thanks for joining us today, and I'll see you in the next time.
All right. Have a good one.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.